Oh, snap. Sorry. Sorry. All right. So it was just an introduction and a recap that I just did right now. Wowza. Right. So first 5 minutes, no sound. I'm sorry about that, guys. But yeah, there we go. I'm sure you guys can hear me loud and clear now. I do apologize. Right. So I was just breaking stuff down for those of you who were not part of us yesterday of what really happened here. All right, a simple walkthrough. I'm just gonna give you guys a 30-second summary of what I was saying before I was alerted about the no sound. I normally do a mic check, but then there wasn't anyone on the live at the time. I do apologize. Right, so this is how I started this morning. I was just like, look, man, this is what happened last night. FOMC had big problems, right? Not big problems, right? We basically got what we expected from the war room in the morning, which was a 0.25 basis point rate hike. Dollar went up at 8 p.m. because we got what we expected a little bit. Dollar took out a couple of supplies, went up a couple of supplies on the smaller time frames. Nasdaq was already positioned at multiple retested areas, right? So let's go to Akinihashi. Why? Because I like the clarity. I like the clarity. All right. So we can actually has already put in all the bars, but basically this is where we were yesterday, 7 p.m. ish market time. Markets had already been here several times, right? So if you know markets very well and you know about money, you'll know that there's something called glass effect, and if price has revisited an area several times, we start to get worried. So all of these supplies were most likely not going to be able to contain Nasdaq, which is fine. But why did Nasdaq go up? Well, number one, there was a lower order block, right? But what was the driving thing for price? Price drops down to this order block. Let's go back to normal candlesticks. I'll show it to you. The whole point of last night was I really, guys, want you to see how this game is played, but also to start planning in that fashion. So there we go. It's 8 p.m. 7 o'clock, sorry, and then we get a news release, 25 basis point. As soon as we get that, Nasdaq falls for that first 30 minutes to an hour, right, all the way into 8 o'clock into Talitha areas, clean imbalance. Why didn't this demand work? It's too close. There's a lower demand, price will always take it. So he took it. And then throughout the entire conversation or the questions, FOMC just kept reassuring the market. He said, look, I don't even think there's going to be a recession this year. He said, it doesn't look like it's going to happen this year. Our estimates, his estimates, right? He said we can definitely bring down inflation to something like 4.3% by the end of the year. And he said we can definitely, for now, steadily move at 0.24, 2.5 basis point, and we could still have another seven FOMC meetings, where we can use, to kind of like increase the interest rate hike. And if need be, by the middle of the year, which is June, July, looking at the inflation peak, we could go aggressive in one or two of those meetings and go 0.50. But for the most part, we think we are in line, right? I can tell you, most financial institutions, private banks, hedge funds don't agree with that. I can tell you that on the ground. I can tell you I don't even agree with him. I can tell you that I believe that the FOMC is behind. He was asked that question. He said, look, man, if you look at it now, right, and when we made the decision about a year or so ago, in hindsight, yes, you can say we are behind. But when we were making the decision, right, we were simply based on what was in front of us. And we still believe that was the right course of action at that time. Right. So he's talking about QE and all that kind of stuff. Right. So basically we have a normal, day to day. I'm hoping those of you did not have sound have caught up. That's all I said. I do apologize for that. And now we just want to track what's going to happen. Where's Nasdaq going? Right, so I'm gonna switch this again here. All right, so we're in the pre-market right now in the futures market, and price again has arrived at another all too familiar area, struggling to fall. And it's safe to say this entire area will be climbed. It's safe to say, I think, that this entire area here on the 1 hour time frame will be climbed, will be dealt with. All right, this whole area here, do not think I'm drawing that trend line correctly, but I'm just trying to show you. It's safe to say this entire area there, markets might actually start to gain some type of ground as London markets open to this interesting news. Interest rates have gone up. Remember, The interest rate is not the news. The news is really more about what the FOMC said in the summary of economic projections, which I taught you guys on in yesterday's war room, right? The interest rate, 25% basis point, was expected. It was priced in. That is not the news. The real news here is the tone of the FOMC. It was very hawkish. It was very, very futuristically looking, thinking things are okay. We've got a strong job, blah, blah, blah. So that's the news. So this is very possible, for something like NASDAQ within the next day or so, it's possible. I generally have no wish to get into this market today. If that's the highest it will go, and tomorrow is Friday, I do not want to be inside a movement that will be caught up with aggressive stock sellers, right? Tomorrow is Friday, so it doesn't happen all the time, but it's definitely something that I'm aware of, right? Something I'm aware of. On the H4 time frame, for better clarity, you can see there isn't any supplies until price gets to about 14,400. Right? So that could be a good target for NASDAQ by end of day. NASDAQ could go beyond that. What I'll be looking at, next week is any pullbacks. And again, I'm not really a buyer in this market right now, right? One FOMC meeting isn't going to change the world, right? One FOMC meeting isn't going to change the world for me in terms of believing in the stock market, right? I still think we're in a crash. I still think Bitcoin is in trouble. Yesterday I was looking at my Bitcoin model. Now that everything I've been waiting for the financial notes is done, we've got the executive order or something that looks like an executive order, right? I'm still to do a video on that. And we now have the Fed, right, who's looking at about a 1.9%. Remember, this stuff affects crypto markets very much. The design of crypto markets is to act as an inflation hedge. So if you get the FOMC saying inflation is there, it's bigger than we thought, but it's not really a big deal. We'll have this under control. Then your inflation hedge, from a macro fundamental perspective, loses value, right? I mean, not a lot of people are going to start panicking. It depends. If FOMC is your God, if you believe everything that comes out of Powell's mouth, and you are an investor, then you're not necessarily running to put money in crypto markets right now. That's my opinion. I mean, at the end of the day, he's telling you that, look, man, for the most part, you're like, if you guys are short-term investors, you're looking at a year. Well, by the end of this year, inflation will be down to 4.3. Our interest rates will be a good median, will be very much close to about 2%. And by the way, we can increase this during half of the year, right? So if we go 0.50, that puts us at an odd 2, right? I don't think that's what's going to happen. I was right that he was wrong about inflationary being transitory. But remember, Powell has a job. His job isn't to help you make money. That's not his job. His job is to remain a worker of the government of the United States and to maintain a specific mandate. The government of the United States does not care about our accounts. The government of the United States cares about the treasury and the financial status of its economy. And a booming market all the time is dangerous for the government, because FOMC's job is to do something called de-risk. When you de-risk a market, you have to pop its bubbles, right? And these markets have been begging for this, have been begging for a crash. These markets doing all-time highs all the time, right? This is a time to de-risk. So I'm not yet convinced about, that we're out of the dark days. I'm naturally, right? So because we don't want to teach every time we meet, we must just also look at charts and do the signals and bounce and have a good day. Our dollar, look at this beautiful thing. If anyone ever dares, inbox me. I know this year they stopped, last year they stopped. They used to inbox me a lot in 2019, because in 2019 I used to talk thoroughly against other retail trading strategies. I don't do it anymore. I don't care anymore. I realized very quickly that if you are supposed to be a 365, you will be a 365. I don't have to spend the whole day encouraging you to see for yourself that your trading strategy does not work. You know better than me. That it's your account. You know your losses better than me. So look at this. Look at the dollar. We have a 0.25% basis point. That is good for the currency. But look at our trading strategy holding truth. Banging outside a governing supply still not giving an inch, right? Markets have failed many times now, like this cluster here, 7th, the 8th of March, a return of price here on the 13th and the 14th of March, and now we've just got a continuous flimsy fall, despite the fact that the markets, the dollar got what it wanted. It got a boost, right? A strong currency. It cannot easily penetrate a governing supply. Why am I bringing this up? Because news will never surpass market structure. This is what you want to master, right? So dollar is still outside here. It hasn't broken out of its uptrend. I'll keep telling you this because it's important, right? And we're looking for a play down here at 96. I marked this level a long time for you, right? So for me, when I start to look at big plays like that, I really am focused on the daily time frame. I don't want any noise, right, in the smaller time frames. I really want something suitable. Also, I want space. If I want to go high, long, I want space between my targets because markets might stop me here again. You remember my almost a year, but technically speaking, it was about 10 months swing on the DXY came to an end here. Immediately closed all those trades, and I don't regret it, right? Ever since then, I'd have lost a couple of $1,000s, right? Markets have been kind of like trading to the downside, supply and demand, right? So we'll catch up with the dollar soon. We'll see if this level will be good enough. If not, then we'll start to see what this cluster is here, these Talitha areas in line with this daily uptrend, right? This daily uptrend is important to kind of like keep watch of. But guys, now that everyone is caught up, let's get back to our normal routine. Right, Federal Reserve approves the first interest hike in more than 3 years. Right, sees 6 more ahead. Right, and it's actually 7. The men actually say it's 7. I don't even know how this headline got it wrong, but whatever. Right, so 6 more ahead, 0.25. One thing that Powell did say, which I'll dig into, over the weekend, I really don't have time to do it during the week, is he said it was a 9-1 vote. There are 12 members in the FOMC. Bullard voted for 0.50. Bullard votes for this all the time, even if there is no crisis. No matter what happens, he's big on this stuff, right? So I want to know why the other two didn't pass their votes. Remember, FOMC is made of presidents of the banks and a couple of governors. Right? It's a big deal because you want to understand these people's mindset sometimes. Right? Here's what stagflation could mean. Man, we're not going to get into that right now. Biden calls Putin a war criminal. NATO chief demands Russian stop the war. I guess the war is still going on. It's my first time catching up with war stuff. COVID pushed almost 5 million to Southeast Asia in extreme poverty in 2021. I think Asia is currently in trouble, specifically China. Buffett closes a record above $500,000 a share. Buffett's conglomerate rose back. All right, go Buffy. Buffy also made about $13 million on oil option calls. 3 months in advance of the war, right? It's amazing, right? I think that just says a lot. UK president cites, okay, blah blah blah. Russia sees China as a lifeline against sanctions, okay, but now America is threatening China. So market uncertainty is going to start to fold back when all this interest rate euphoria starts to phase. All right, so we're going to move on from here. All right, what I really want to do is just to see a temperature check. Let's go pre-markets. We should see all green. There we go. NASDAQ, S&P, blah, blah, blah. Look at oil, struggling, 97, right? Those of you who are in that trade, just watch out. I did tell you it's a very risk-sensitive trade for now. But I'm in it anyways. But if you have the stomach for it, watch out. I suspect crypto doing well. Bitcoin back at about 40, right? Why? Look at this. Coupling with the equities market, right? So if Nasdaq and these things are doing well, trust your crypto to also be doing well. Do I think this is a long-term trend? Absolutely not, right? XRP did well with its case. Look at it. This thing should be at $1 right now. I mean, this is just watch for the games, guys, right? Gold yesterday was at 1917. We're back to 193 something, 1931. Why is gold up when the Fed gave us a good boost, right? Silver, extra, palladium, platinum, okay, right? So for the most part, that's where it is. In the U.S. markets, we'll see Russell doing okay, but hasn't broken out of this range, right? The 2030 is starting to annoy, and the VIX is below 26. Who's here? 6 people are here. Let me just teach you about the VIX. The VIX is an index. It's not that synthetic index nonsense, right? I'm talking about the actual VIX. The actual VIX is a fear gauge, right? It's literally on your trade view. So we're going to go volatility, and it measures S&P 500, which yesterday I told you is a good chart tool to check the Fed's heartbeat. This is what people are looking at. I'm going to go straight to the monthly time frame. I want to show you something. So the VIX measures fear in the markets, and if we are trying to quickly take good squeezes, right, in the markets, like really want to make sure that our long positions are on the right side, we generally come to the VIX. We want to understand, how the market is doing. Above 30 is crap, right? When the VIX is trading above 30, see, I've put a line there. VIX, the volatility S&P 500 index. When it's trading above 30, it means there's just so much fear. Fear is caused by uncertainty. We don't know if the FOMC is going to increase the interest rate. We don't know the impact of the war. That's what the VIX does. When it goes above 30, it's crazy. Now, if you look historically above 30, right, we can start to pull out some dates here. This is 1991. I don't even know what's going on. 1998, I really don't care. There was a big financial crisis in 2002, 2000. I remember this one. That's the tech boom. Price went above 30. This is the next one here, 2008 financial crisis. You see how high this was? The big 2008 financial crisis. We know we're a big market crash and market recession. Right, here we come again in 2014, 2015, right? The terrorist saga. I don't know if markets closed above that or that's just a wick. No, markets closed below that. And then we come here in 2018, markets closed below, okay? Right, so that's fine. And then this is COVID. When COVID came, markets closed above 30. Have you noticed, despite the war, markets are so crazy, man. Despite the war, we have kind of like fluctuated above this 30 mark this year, right? But so far, markets in January, February, and now this is the March candlestick, so far are trying their best to maintain this uncertainty. This is a chart you want to look into every once in a month just to check out what's going on. It's the VIX Index. And so you'll see it. It'll always be on the CMB website, like VIX is okay. When investors see this go above 30, most of the time, there's correlation with flights to safe haven. Most of the time. Because above 30, once again, is a dangerous time to be, right? So in case I never come back to this chart, this is a morning routine that we do on the 1st of every month, on the 15th, and on the last day of every month. I don't look at it every day, but at least 3 times a month. I have an alarm that reminds me to check my VIX index, but it's always here. Once you go US, you will always see the VIX index, right? So it's something to be mindful of. Right, ladies and gentlemen, let's rock and roll. Typical of FX headlines, Central Bank of Euro Central Bank, there is no recession risk despite high uncertainty. I'll remind you again, yesterday I told you that ECB cut their stimulus despite the war being inside their backyard, moving more aggressive than America, by the way, in terms of inflation. And now one of their ECB policy makers, right, Francois, is saying there's no risk, there's no recession risk despite high uncertainty. In Europe, they believe they've got this stuff under control. Wait a minute, is the euro not at a demand right now? Is euro, USD, euro in general not at a big demand right now? It is. So these are the kind of things you start to see to feed into that push, right? I'm just trying to connect the dots here. Toyota, we're not looking at individual stocks. We'll move on. Switzerland, we'll move on. UK military intelligence, Russia invasion of Ukraine has largely stalled on all fronts. It feels like it. It feels like the war is quieting down. Right, Bank of England, the main event on the agenda in Europe today. BOE is going to be hiking rates for the 3rd consecutive meeting. Did you hear that? Check this out. This is why I'm saying watch out for euro. Euro is trying its best to be ahead of the curve. They are killing market fear with headlines like this. I don't know if people will believe it, but this is a good assurance. Euro is at a demand. There is no risk recession coming up. And by the way, at some point today or tomorrow, whenever it is, we are looking at hiking rates for the 3rd time. This is the Bank of England. Look at America. Finally, for the first time in a long time, in 3 years, there is now a new interest rate hike in more than 3 years, right? Euro is 3 of these ahead. They are going to hike for the 3rd time consecutively. So watch out for euro strength. Watch out for euro strength. This is the Bank of England, right? So specifically the pound. Watch out for some strength in the pound, right? The Bank of England will affect the pound. Watch out for that. You're going to have a strong GBP rally. So if you're looking out for that. Australian buoyed for strong jobs reports, right? Strong jobs, strong AUD. EURGBP. I was stopped out of this, by the way. EURGBP. I haven't had a chance to go look at why. I will. I mean, it was one small trade, but man, I don't know if I'll even see where I wanted to take the trade. But somewhere in here, we had a 15-minute supply set up, and I believe we were stopped out. It could be this one, maybe. I don't know. I'll find it for you, and then on Friday tomorrow, I'll review my losing trade this week. But EURGBP, we were stopped out. USD a little bit weaker post FOMC. All right. CNBC, blah blah blah. Bank of Japan governor says we'll keep easing. We'll keep easing until inflation target is achieved. Everybody's starting to tighten. All right. Even JPY. Right. So maybe that's why AUD failed. I don't know. We shall see. Right. Okay. I'm bored now. Let's look at charts. Right. So we're gonna do our usual routine. I am a couple of 1 hour lines behind, so you'll bear with me as I reconstruct that stuff. I'm gonna start off with the first chart is Euro Pound. This doesn't look like, yeah, it is. This is the 1 hour. Let's go to the 1 hour time frame. Right. That failed. Oh goodness gracious. Thank God I know. Oh wow, I really believed in this level. Have a look at this, guys. Right. So I think we should start taking this euro strength quite seriously, man. And this is, by the way, a big trade for a sell. Like, so if banks are not yet ready to sell, well, can I just quickly see what the daily looks like? Just want to see what the daily looks like. I'm really interested in selling this thing, no matter what. Right. So with the arrow effects, that's why we didn't take it. But okay, so price bullishly runs into this area here, which to me looked like a typical classic supply, but I guess it was a first supply, so lower, and then markets turned on this one up here. Unfortunately, I'm not in it anymore. I don't know what to do. I'm not in it anymore. We know we've got our prime supply up here, but markets haven't got there yet. So a part of me feels like I should just wait for that. A big part of me feels like I should just wait for that. So there was a big push. If you check on the smaller time frames inside here, guys, there is the gaps. They're like a couple of, there's one big gap on the 15 minutes or something. I'll go find it for you. But this, for me, definitely felt like a swing area. I guess it's not fundamentally because it's the first supply and there are higher supplies, but this thing wants to sell, right? Deep down in its heart, after the euro strength flutters away, this thing wants to sell. I'm on the weekly time frame, and I can see that my daily sell area does not have confluence, right? So maybe that's why we got punished, right? My fault here. Should have stuck to the entire cluster of rules. There is no supply here. You can't really call any of this a supply. There's a bullish engulfing pattern that fails, and this does not really re-engulf, right? So on the weekly, there wasn't much support. And then this is where I want to try and sell again on the daily, right? And maybe that could work. I'm starting to wonder, right? You can see price did try to arrive at this area, and we've got multiple rejections here. I wouldn't like this level. This was a retest of a bullish engulfing pattern. Didn't even give us a clean imbalance. Goodness gracious, right? So euro strength is real. Like the headlines we just looked at. There's a whole thing of we're not thinking about recession, number one. Number two, Bank of England and Europe, we are all consecutively increasing our interest rate. These guys are pumping this market as high as they can, before the chips fall. I mean, I get that because there was no weekly supply, this didn't work. But for the most part, man, the daily did look strong at the time. For the most part, markets had closed above this area, which I guess was a negative sign, right? Markets are closing above, that is break of structure to the upside. But nonetheless, I think I got really focused on those gaps. Interesting, right? So price is reacting up here, but I'm not in it, and I don't want to really rush to catch a fall in life right now, fundamentally because of this baby supply. It's not our our rally-based drop. We've got a bullish engulf in candlestick inside the supply. You don't really have that much of a base, which is sometimes a very good thing, and the rally is quite consistently low. So this could work, but there's still this cluster here. Euro pound is starting to annoy me. Now it's starting to become more complicated than it needs to be. On the H4 time frame, it's the only trade I'm gonna do a full MTA, guys. I apologize. Right, so this happened yesterday, I think yesterday, 15. Oh no, this happened the day before yesterday, Tuesday. All right, normal stuff. All right, and then market started to fall. Right, but definitely, if I forgot to put a pin in order, but if I did, I probably took the loss and didn't even notice. Remember on this account, I'm really using small lot sizes. Like my maximum paying is 250, the other one is 1,250. So I might not notice $60 go missing sometimes. But I definitely remember having a lot of faith in this level. So this is quite shocking, right? So they did fill the gap, which is what I thought they would do, and then go down, but instead they kept hunting, managed to do a distribution pattern, and then finally closed above there, right? So because we didn't have a London morning session yesterday, we had a full war room. It's probably why we missed this yesterday. But I just want to quickly see if markets were reacting to something on the left. That is to say, was there a better H4 supply that price turned to, or was this a banker's trick, basically an original turn? Okay, there is something, but guys, honestly speaking, unless if you switch to a Kinihashi, I would never have known to catch these type of levels. I wouldn't have. I mean, I don't think I would have. Right? Kinihashi does do a good job of cleaning stuff up. Right, so now we've got a peak supply. You can see it, strong rally, strong base, markets take turns, fresh supply, fresh touch, markets don't return until we get this retest here on the left, right? So that makes sense. A higher supply did prevail. We should just have looked deeper. I should have looked deeper. Not we, me. I should have looked deeper. Right. If you took this trade, I don't know who did, and you took an L, sorry about that. That's just poor analysis on my part. Right. So markets have found something that they like somewhere up there. Unfortunately now, I'm not in it right now. And I think for me, I'm going to have to wait for this market to make up its mind. So maybe return to the drawing board of Euro Pound next week, Monday. Let markets rally today. Remember, when markets drop, it doesn't mean they've left you. They'll always come back. They'll leave order blocks, etc. So let's see some commitment. This is what commitment would look like. We can just shake off the L, and start to look for commitment would look like this. And I'll sit with my accounts today and just see what's been triggered, what's not, right? So we've got AUD, JPY, and if I am triggered and lost this thing, if I did set a pin in order, Euro Pound. But this is what commitment looks like to me right now. If for intraday, but H4 is quite a big time frame for intraday. They have to break structure down below, and then yes, they might have to negotiate with this or come all the way down there. But if they do negotiate with this, then we're looking at hopefully prices pushing all the way up there for a deeper sale, right? So that could be a nice thing to look out for. Bearing in mind, there are several supplies up above. Number one, number two, Kinihashi is not really showing us sustainable order blocks, but it doesn't mean it won't happen. It's just letting us know that for the most part, this was a strong buyer's momentum, and to equalize it, you might have to return back to these lows here. So you might not get a retracement back up. You might just get a consistent drop, right? But if you look at it from a buyer's perspective, since euro is slightly strong right now and dollar is falling, so euro will be strong, then you see how this perfectly aligns with the golden ratio retracement for a buyer. That's why I said price would drop here and go up there. We go to normal candlesticks, it aligns with that because of the order block there, to leave the areas trading sideways, right? If I've taught you before, you know what I'm talking about. And then markets bouncing up, right? So I wouldn't want to rush this market up, although right now there's a lot of euro strength. I would wait to see the highs. Because fundamentally, I just want to turn this intraday entry into a swing. That's what I want to do. I don't know what you guys want to do. I have no intraday interest on euro pound because the money is on the sell side, right? Eventually, things will self-correct. So what one might want to wait for is pound. When will be the pound is Bank of England is threatening a third consecutive rate hike. So once the pound is strong, right, against the euro, then the euro start to fall. So let's just see when that is, or if it's happened. Is it happening? Today's Wednesday. Today's Thursday. All right. Today. This is happening today, my people. Right. So we've got bank rate votes. We've got monetary policy summary, like FOMCs, and then we've got a situation like this. These guys are not playing around, bro. 0.25 America. These guys already did 0.50, and there is a third consecutive. So the forecast is today they're going to push for 0.75, another 0.25 on top. And you know the drill. You know the drill. If interest rate goes up for the Bank of England, right, then actually greater is good for the currency, right? So pound could strengthen, right? So this is why I'm saying this is an interesting play. If this is to happen before London session, right? This is happening at New York session. Yeah, this is happening just an hour before the New York markets open, right? So you can imagine Americans, right, opening about 3 o'clock. This is happening at 2 p.m. There'll be a lot of flash money around these areas. So I would watch out for that stuff. If you know what you're doing, and also double check your charts. If pound does get substantive strength before markets do this, then all you can expect is you can only wish that you're inside the sell right now, because markets will just fall straight through. I want to be very clear. If we don't get a retracement before 2 p.m. to a better supply, and then when that news comes out and they meet or they get the interest rate for the pound, right, then you can expect euro to take a blow here and keep dropping, which means we really should have had, I mean, I don't regret having the war room yesterday, but had we had this situation of our London session yesterday, this would have been an easy trade to take, right? It's a clean order block. Markets probably arrived here at about 11 a.m. yesterday, right? Straight into the London session. This order block was created the day before. So it's an obvious take. Markets have rallied into supply. Markets have dropped. So watch out for that. Watch out for that. On the 15 minutes, maybe even 1 hour, you might be lucky and find an earlier place to sell. Let's delete the fib, because there's just so many things on the chart right now. And then let's just quickly put, because of time, folks, it's already 10 a.m. I'm going to do the first 5. I'm going to do Euro Pound, Euro USD, EURCAD, EURNZD, Euro Pound AUD, and then disappear. If that's okay with you. Unfortunately, I've got a couple of things to get through today. Right, so that's, I guess, the 14th last week or Monday, I don't know. And then we're going to find the 15th. In the private group last night, I posted the breakdown on the 15 minutes chart for NASDAQ 100 since Monday this week. You really should take that, scroll back up if you're in the private Telegram group, and really have a look at what I did yesterday, right? This is fundamentally what you should be doing. One of my senior traders, I don't have any favorites, but one of them was hell-bent on becoming an intraday trader long before I had module 3. And remember, I piloted module 3 for almost 9 months now in the senior traders afternoon reviews, because they understand the game, they're okay with losing money, etc., etc. And as I was developing this thing and backtesting, trying to rush for 1,000 trades, one of these guys, one of these smart buffoons, and I think there's the second one in the Senior Traders Academy. These guys they print, right? I'm not saying you should do it. I'm just saying he prints his daily chart in. So today is Thursday. He's going to go to the 15-minute time frame of yesterday. Yesterday is Wednesday, from midnight to midnight. So Tuesday, end of day Tuesday, 1 a.m. Wednesday, midnight, up until midnight of Thursday when today started. And he always has that printed in 15 minutes. He has files, reams and files of marking out his charts. All this analysis that I'm doing here on TradeView, he does it, and then he does it manually again. All right, and it's because he wants to be good at this game of intraday trading, and he understands that the patterns are the same. I show you that the patterns for this week did not change one bit. Open at 9 a.m. futures market, order block given, following the trend. By 11 a.m., 10 a.m., markets come back to that same order block and react up to it. 3 p.m. open time, same story. This is not like a drill for fun. I promise you, if you take the time to work on the stuff, you will start to see markets clearly, right? It's just really my job is to show up here, sure, but a lot of the work is on you, right? So there's our clean break of market structure that caused this big upward rally, right? I mean, I hate to be a stickler, right, on the 1 hour time frame, but you know me, I don't want to ignore it, right? I know for a fact that markets can still go a little bit higher. Will they go higher? I don't think so, but I know they can. Right, so that's the situation here, right, in this order block here. That's what markets were trying to catch up with. Okay, fine, yesterday, whatever, we missed it, the war room, and now markets are coming back down. I don't know if there's enough demand in this area to push price back up, and I don't even know if that's going to be a good idea. I definitely won't sell down here. So what I'm saying is I don't think I would be interested in this, even though it might be the only play, might be the only chance to get into a sell before, you know, the pound interest rate hike drops, right? This might be your last chance. If you're a cowboy, you know, good luck. I won't be doing that. I'm not desperate for this small term trade. I personally would like something a little bit more meaningful, right? So I'd like price to go a little bit higher. Maybe they don't even increase the interest rate. Who knows, right? So on the 50 minutes time frame, markets are extremely choppy, making it very difficult to read. Right, so we've got this situation. To me, this looks very much mitigated already by all these levels, right? So, you know, a risk taker, a better cowboy, who grew up in a farm with electricity, maybe not those ones where there was not even electricity on the farm, might want to try a sell setup somewhere up there. But just so you know, this is not a fresh level, so I wouldn't do that, right? And then me, who doesn't like riding, you know, maybe a pony boy, I'll be a pony boy, I'll wait somewhere up there, right? But this means nothing right now up until that the interest rate pound hike comes through. This might not even happen, right? But this is where you know, markets are looking at if pound is strong. If pound is not strong, if they don't get the interest rate hike, markets might be disappointed, which means euro might then take turns to beat the pound today and tomorrow and rally all the way up even further from this point, right? But this is a good place for me to take a chance. Now I need to adjust my stop loss placement because I don't like how that area looks. I'm going to go to the 5 minutes chart. Oh, it's clean. It's clean. That's very clean. That's so clean. That's so nice, right? But unfortunately, there's a lot of noise above that area of value. And so I have to take one for the team, right? So I'm using the 5 minutes chart to clean up my area of value, which means my stop loss is going to be somewhere here, which is unfortunate, right? Because you never want your stop loss at the beginning of a potential area of competition or an entry point. Remember this big zone here on the 1 hour H4 or whatever it is, where I've forgotten whether it's H4 or daily. This big zone here, put in your stop loss. Let's change colors. You see this red box that I've just made for you? This is the 15 minutes, 5 minutes box that we are targeting for today. Putting your stop loss outside here creates such a mess for you, because markets know there's better supply orders there. But more importantly, you are literally in the firing line of a liquidity rate. That is not a good place to put a stop loss, because essentially all markets have to do is to honor this area and sell, but there's a better, higher supply here. And how do we do that? We're going to make contact with the proximal line, right? The entry point. And all markets have to do is enter right there, and then boom, you and your stop loss are no more, right? So it really depends on the cowboy here, but you'd rather try and target a little bit of higher picks in there. But now look at how big your entry point is. It's not that big, but it is big, but it's not. Remember, you're on a very small time frame here. You'll be surprised this is still less than 30 pips, or at least I hope it is. I could be wrong. It could be like 100. Come on, man. I've been looking at this stuff naked, right? That's about 26. Let's drop it a little bit more. That's about 28 pips, right? It's not a big deal. It's up. Honestly speaking, I would far much more rather put my stop loss like that, right, inside this necessary area in case markets do something like that, right? And then see where the chips may fall. But this might be a very good place to chill. Those of you who want to kind of like take the risk as a cowboy, this is what this area of value looks like, right? And then yeah, it's up to the markets to decide what's going to happen today on euro pound. But once again, if we don't get a touch bounce before 2 p.m., and markets seem to be moving very slowly, by the way, we are in trouble, because then markets could just fall if pound is strong, right? I've spent time on euro pound. If it's okay with you folks, I'm going to be moving on. We've got our euro USD, which I can only assume is still strong, right? Still strong after last night, still strong coming from a demand. And then all of a sudden, dollar failed to break through a governing supply naturally. And so markets are still doing well. These markets here, euro USD, finally found some good footing in this governing demand. Markets are still doing well. This area here, just so we're all on the same page, has been tested before. It is not an attractive place to sell. It could work, but it is not an attractive place to sell, right? We should have really, and I remember saying this for me was a cowboy trade. I was saying somewhere in here was a cowboy trade, and I was right about that, but markets shot up immediately to take that supply, right? Supplies on top of supplies, be very wary of it. But right now, it's the only thing left, right? It's the only thing left right now, right? There's this red line that we have here, and that's to mark that. But if you look very carefully on the 1 hour time frame, this did not do a great job creating an imbalance, right? This is not the best work in the markets, right? And the imbalance is really inside, a strong buying structure, right? So I don't know if you trust it. I don't. I would never sell here. I would never sell here. I would even go as far as saying this more of a swing pivot high than even a supply, right? I'm not interested in this at all, right? So one could then, look at the account and ask themselves, is it worth the risk? If it is worth the risk, then you can take the risk and come here. Generally speaking, for swing trades, we never, ever retake trades on PCPs. PCPs, we take one touch, right? If you follow my module 1 teachings, you'll remember there are different areas of value for a reason. This is definitely a PCP. We can all see it's a PCP. I'll show it to you one more time. Let's just build some market openings here. That's 9. That's the next day. Tuesday next. Then Wednesday. Oh, today, sorry, Thursday. Right. So markets once again, try to dip in. Now look at this. Look at the structure. What does this mean? You have to look at this. There's a low here. Markets coming down. Stop falling there. This is the problem with Bitcoin. By the way, Bitcoin has a micro analysis for me for a downtrend. I'm ready to start dollar cost averaging. I'm tired of holding all my cash, but Bitcoin isn't making new lower lows. So a part of me is like, what do I tell people to do? What do I do for myself? Do I start buying Bitcoin back at 40,000? It is not where I want to buy it. But again, macroeconomically, Bitcoin is neutral, right? And it's got very little to do with the interest rate. I'm sorry for going on a tangent here. You'll see this on my well thought out Bitcoin video, which I think I've finally thought through properly inside my head. Normally, when I feel like I now know what I want to say inside my head, I hit the record button and I start talking. But Bitcoin needs 2 things, ladies and gentlemen. And this is how it always works. If Bitcoin doesn't get 2 things, well, price will fall. And the 2 things are, we need more, maybe 1 million, maybe 500,000. I don't know the number. I'll look at Glassnode and do the maths. But we need new active wallets. The wallets that we have, guys, are currently carrying 3.2 of the supply. And those wallets are wallets that have historically never sold. What does this mean? It means most of the Bitcoin right now is historically in the hands of whales. Whales don't sell. Whales use that stuff for accumulated value, put API on it, get some interest, borrow it out, but they never sell. Whales, generally speaking, create a base for price. So if whales are not going to sell to tank, and whales are not going to buy because it's too high, because those guys bought when it was like $20 or $100, what you want is new active wallets, and you also need new volume. You need somebody. You want those scammers to go around scamming people. No. That's not what I mean. I take that back. But you basically want stupid people. You want stupid people or late people. Stupid people because you didn't listen to my videos 2 years ago. That makes you stupid. Buying now. All right. But also you want late novice people who are willing to buy Bitcoin at 40,000 US dollars, who are willing to buy high. You want them in drones, in millions and trillions. And you think something like the interest rate would do that. Because if the interest rate hike comes up, right, then the Fed is saying, look, man, inflation is a problem. The only way that was going to work last night is if we had a rug pull and it did 0.50. Because I told you guys in the war room last night, this would mean Powell is actually scared of inflation. The man is not. He's like, yeah, it's something to worry about, but we got it under control. You know, by the end of the year, we'll be at 4.3. Look at us. We're really dope. We know what we're doing. Yeah, you guys think we're behind the curve, but we're actually not. We know we're working the best we can. And there's the war, right? And we can't just increase the interest rate high because, like, unlike other countries, the dollar is a big currency in every single currency. So in every single country, right? So had he done this, Bitcoin would have gone flying because for sure, there's a problem, but he didn't. He went 0.05. So Bitcoin is stuck right now, you know, from a macro analysis, right? But you guys will all get my newsletter today or tomorrow. The newsletter is just a basic overlook of crypto. That's for the public, and then for those of you in the world in 3 years, you're going to get my final thoughts, right? I think we should leave the mainstream coins for now and go and do our hustle and bustle with altcoins and metaverse coins, gaming coins, and network coins. Let's go build networks. DeFi is down 75% right now. Most DeFi projects are down 75%. And I mean, if you want to know the stuff, please join the Wealth in 3 Years program. But just as a heads up, DeFi is going to be a big part of our future. At 75% discount, I think that's where our money should go to work. That's my humble opinion. All right. You'll see those of you are going to get my financial note. I think our money really should go to DeFi supported crypto coins because at 75% overall, there's no brainer. All right. We're looking at a year. We're looking at a year of a turnaround in DeFi, and that will nicely pick up a lot of stuff. We also want to put some money in network building. I don't know if you guys know this kind of stuff, but just so you know, Ethereum 2.0 is ready. Ethereum 2.0 is ready. And so that's a big thing. Remember, Ethereum is supported by a lot of projects, right? A lot of undertone projects. Release date. Let's come here quickly. Right. I'm still doing my final research on this, but pretty much I'm very happy with this, right? Just need to get their gas prices correct. How long for the wait? Where's the release date? Blah 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 blah. However, blah 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 blah. Right. So next year, right? And you're gonna see this is gonna start to affect that. So I need to study all these different projects. Most of these projects will start to take effect this year. All right. So once they announce that 2.0 is ready, which they have about a day or 3 ago, this is a very important release, right? And you can imagine, guys, there are a lot of non-mainstream coins built on the Ethereum network, right? So that's where you want to put your money. That's really where you want to put your money. That's where I'll be putting my money, right? That's where I'll be putting my money. Bitcoin and the big boys, our dollar cost average as usual, but I'm not going to give it a large share of my capital, right? The reason why I came there is because Bitcoin is not yet making lower lows. I still think it will fall. I don't think we're out of the woods. Everyone thinks we are. Right? I'm happy to be wrong. I always tell people I am an investor in Bitcoin and a trader in Bitcoin, right? It's not like when I say I want it to fall, I'm an anti-crypto guy. No. I'm just saying I'm aware of where it is. And 22,500 US dollars is looking like a prime target for Bitcoin. 22. Man, I'm wasting time, but hopefully this will help you, right? I'm wasting time showing you this kind of stuff. Let's do this. Let's quickly go to Bitcoin. All right, you see this cluster, the stupid range here. We're not breaking out of it, right? For a reason. And then let's come here now, guys. Where do you find indicators? I mean, you indicator experts. Where are those nasty things? Indicator and templates. There. Right. I'm gonna get a moving average. I'm gonna get a moving average. Real quick. Moving average updated. What does that mean? I don't know. Let's test it, right? This might not work. I haven't used an indicator in years, but I suspect this will work. So I'm going to go 250 on the length, which is I want a big, wide spectrum of price, right? So that's what it looks like right now. We're under that. I want it to be below. I want you to see. There we go. There we go. So on the weekly time frame, 250 moving average, you see where price is. You see where price needs to come to, right on this 20,000 mark. And this for me is more interesting. And this for me is more interesting. Let's go to the monthly time frame on Bitcoin. Did it disappear? Hey, you people use indicators. What's going on? Where is it? Can't even handle that data. Useless nonsense. Right, so let's take the weekly for now. Right, this is interesting. This is interesting. Leroy, well, what does this mean? Well, let's look historically. Let's look at the 2017 crash. Let's look at the 2017 market crash. You see this 70,000 market crash? You see this here? You see this here? Right, 2017 price came into here with this 250. So if I was to do an indicator, all my indicators would be long. There wouldn't be 9, there wouldn't be 12, there would be 200 MA, they would be very big. And when my bot comes out, you'll understand why. But look at COVID, right? Because of the crash, the Feb crash COVID, markets had to make contact with my 250 moving average. I don't like using indicators; they lag. In general, I don't even encourage it. Now this is where price is, right? So I might not get my dream 12,000 mark, but this one, crypto ain't bullish no more if it goes below 28,500. All right, we're in a bear cycle in a bull market, but once we cross this, we're now in a bear market. When we get to a bear market, guys, once we go below this and we're now in a bear market, this is at play now. This is at play. You know, it's really now time to bum and chill with the big boys. Right? So this is me. You know, this is me. You know, you will see. Only time will tell. Only time will tell. I'm only turning 30 something this year. 30, I don't know, 32 or 31. I can't remember. But well, whatever age I'm turning this year, I'm still young enough to see this happen. Right? Let's remove this ugly thing. This is not good for short time frames, by the way. It will mess up your trading. Oh, look, how cool is that? Look at where I want to sell EURUSD. Look at where my moving average is. Interesting, right? But I don't want to get into moving averages. I don't want to confuse people. Right. So EURUSD is currently making high highs. All right. So it's something that you want to be watchful for as an intraday trader. It has not closed any lower than it has in the past. If you're not in the Walton 3S program and you're not going to join, look, man, I really hope you listen to what I said about the projects to look into. Whether you do it by yourself and you lose money or whatever, you know, all the best. But I'm just simply saying, take that stuff seriously. A good coin investment and consistency for a year can change your freaking life. You can be a terrible trader and live off good investments. Take that stuff seriously. A wealthy in 10 years program is $10 per month. And sometimes I don't give you a financial note next month. It rolls over to the other month. It's just such a cheap investment into your lives when you get that stuff. And I'm very accurate with that stuff most of the time. Right, anyways, there we go. A new low here. Right, so look, man, we're bullish. You should be looking for buys. Short-term traders into USD, you should be looking for buys. Buy into what? Like I said, personally, I don't trust this. But on the 15 minutes time frame, we can be proven otherwise. On the 15 minutes time frame, all of a sudden, that annoying peak might have very clean, sharp supplies that you need to be aware of. But as the bigger and the more clarity you get from time frames like 1 hour, H4, etc., you'll then start to realize that this is not really a big deal. Right, so we had a sharp bullish engulfment candle. You had some type of market reversals. I still do not like it. I didn't get the base that I want. I got a high peak. These are buyers trying to wreck the supply. Then with this push back in, the zone is still there, it's still strong, right? And markets went back, right? So markets right now are negotiating with this area here. You can see the dotted lines. I necessarily, once again, don't care for this area. I feel like this is a good place to hold people. People put their stop losses above this red zone, and there's a bigger supply above there, right? That would qualify as a liquidity grab, right? And I don't want my money being part of liquidity grabs. Right, so just be mindful of that if you are buying, right, that this 15 minutes might give you signs of bearish and might not, right, but just be careful selling the red, right? Selling in the red, to me, I don't trust that there's a supply there. Right, so markets have opened like this at 9 a.m. You can see that we've kind of like classified that, you know, euro is going to start off strong today. Would you be surprised that by 10, 11 a.m. markets would have come back and retested the zone? Would you be surprised? I wouldn't be surprised, right? So each to their own selves, a cup of tea, right? But this is very possible. This is very possible. This is very possible. This is very possible today. You'll let me know. I honestly today I don't even know if I'll even be allowed to trade. Four of my traders came back last night. They're back this morning. One did amazing with catching up with wheat trades and all that stuff. The other one is struggling a little bit, not struggling, like they don't know what they're doing, but they got stopped out. One is down by about 8,000 US dollars. I need to figure out what's going on. So that's what I'll be doing today with my time until about 3 o'clock. Right. And then my son's got spots in the afternoon. Right. So look, 11 pips risk, 42 pips reward. That's 1:4. It's 1:4. It's there. It's a play, right? And this is if you actually believe that this is worth it. If you followed what I did 3 days ago when I told you guys, intraday traders, 11, you come here, you get a calculator, you look at your pip size, you look at your account, you look at your wallet, you remember that trading comes with substantive risks and you can lose all your money. But in the event that you are right, you want to position yourself to win, not only for today, but to position your account to be able to handle the pain, right? So you say, well, this is a stop loss of 11 pips. I only have 250 US dollars in my account. I only want to risk 5% of it. Wow, I can go 0.11 on that. That's amazing. And then what you want to do after that is to have maybe 1 or 2 or 3 positions. But that being said, you only want to divide that off the 5%, right? So you want to have 0.4, 2 0.4s and 1 0.3. I don't know if that makes 11. Doesn't sound like it does, but maybe it does, right? And then you want to start pulling out your Fibonacci's, man. This stuff is golden. I've given it to you. Take profit 1, 50% mark right there, and you're done. What does take profit 1 do at the 50% mark? It gives you a healthy 1:2, which means no matter what happens, you've now made what you're going to lose if you're wrong. And then take profit 2 and 3, you start to space these things out. So 75%, you might have take profit 2. And then take profit 3, you break even. Why do you want to break even? In the event that markets actually go through this into tomorrow, and then take profit somewhere up there, right? Or you might get stopped out and break even. Dealer's choice, right? But this is what I'm seeing on EURUSD. We'll come back tomorrow and see what's going on. But for me, strong market opening, strong bullish engulfing candle, break of market structure here to the left, ladies and gentlemen. Just double confirming euro strength. We know the dollar is down right now. The dollar ain't happy that it got an interest rate, but then got smashed across the face by governing supply. And so until the dollar finds a place to land, euro is going to do well. We also know that a euro ECB is just told the whole world, and Lange is speaking right now, in the next hour. Lange, she is the president of the central bank. I'm not going to stream this one, and today's one is not that important, but she is the she's Powell. That old lady is Powell in euro. She's about to tell the world, and you saw what she said earlier on. She's more hawkish. Number one, if she is, and I know she will be, she just said, we don't think in recession is a thing. FOMC Powell last night ain't looking at recession this year. Either all of us as financial analysts are completely local and we've lost our minds, or these banks have their own private Zoom meetings where they think they can play with our money. All right, one of the two. I'll remind you, there was a big international court case in 2008 during the bankers' financial crisis, where banks told everybody not to worry, that the markets are not crashing, while they were selling dead bonds because they knew a crash was coming. Once again, the banks are not your chommies. They are not going to tell you what's actually going to happen. Their job is to sustain it. Whether they sustain the economy with your blood money, that's none of one's business. In Zimbabwe, in 2008, 2009, a lot of people woke up and were told there was no more money in their accounts, as in the government just literally took all their money. This is a normal thing for reserve banks to do, because most of you believe that is what democracy is, because you vote these people in. Yeah, it's a fast, but just be careful about this. She's going to strengthen the euro. Be careful about how the pound's going to operate today, right? Today is a fun day of games, right? So look at this. Strong, clean open on the euro back foot against the dollar. And so what you really want to do is to catch a pullback. You really want to catch a pullback of this. You don't want to take the most obvious pullback because you're not a kid, and this to me is the most obvious pullback. Markets could react here, but that would be unfortunate. You can already see the area that we want to take, the 15 minutes order block. Look at this on the 5 minutes chart. The 5 minutes chart believes it's already done that, right? It's almost like we should actually have these morning sessions at 8:30. Look at this. Look at our markets open here. So this is 9:35, 9:40, and by 9:55 markets pull out, give you a good imbalance, come back to retest and go, right? So now that's why there's a flow. And then when this is done there, so a much more articulate mathematical trader has already moved their stop loss from here to break even. For trade 1 and for trade 2, their stop loss is still running in the event markets come back and retest this red zone. But on the 5 minutes chart, right, price could come back and do a retest, but this is why there's a strong rally push right now. For intraday traders, once again, your smaller time frames show you the meticulous creation of the daily chart. Remember, tomorrow when we're looking at the daily candlestick of today, it is a series of these supplies and demands that are taking place on the small time frames. These have to become your friends. You have to understand their sensitivity, how volatile they are. We go through a Kinashi, you'll see clean volume. That's why I said I wouldn't want to buy there. I wouldn't want to buy there where there's that order block. It's just a buyer's volume. I'd rather risk money here on the weight. That's what I would do. I don't know what you want to do. I don't know if you want to take the trade. Right, I am running out of time. I've got 8 minutes left. Let's look at EURCAD. I hope that helped. EURUSD. I think I'm done there. Look at EURCAD on the 1 hour time frame. At some point, guys, I promise you I'll stop teaching and part of me is like always wondering, do people really understand? Are they clear? Did I do a good job? They don't really get a lot of feedback, like you know what I mean? So it's absolutely important, right? So we haven't really had an intraday look at all these charts in a very long time, it seems. So I was away Thursday, Friday. When Monday I came back, I don't remember what I did. Then we did a war room instead of a morning session. But it looks like price came back to one of these levels. But let's see exactly what happened. Let's see. So that's 9 a.m. on Monday, right? And then we know on Tuesday I couldn't do it. And then yesterday we had a war room, so we did not see it. This is yesterday. And then now we're into today. Clean opening, right? So same thing on the 1 hour time frame on EURCAD. CAD, oil is down. CAD ain't playing games today. Oil has been down for a while, right? I'm not saying you take the trade. I'm just saying, look, have a look at that level. That's how markets are opening today. Interesting. That's all I'm saying. I'm saying it's interesting how markets opening today, right? Same with EURUSD. Here's the brush. Let's go lows, right? So you got something that looks like an uptrend, right? For the most part, right? Let's just have a look at the bigger picture, which I don't remember, right? Look at this EURUSD bouncing off a weekly demand, feeding through into the daily demands, right? Markets were a bit up and down in that level. I'll zoom in for you so that you can see. Just give me a second. If this helped you, don't forget to like the videos. This is going to be my second last chart, then I have to disappear, right? So markets did break this area of values. Not really anything to write home about, right? Actually, I don't even know why it's still there. Is it clear that it's broken on the weekly chart? Yes, it is. It's very clear that this area is broken on the weekly chart. Of course, for retail traders, this is a strong pattern. I don't know, they call it a morning star or something. I don't remember the stuff. You know, my first year of trading almost 9 years ago, someone made me like master patterns nonstop. Some guy from Cape Town. I paid him about 15,000 rands at the time, and I was mastering patterns. Yeah. It's been tough, man. It's been tough. There we go. So it's Doji Morning Star, right? Morning Star. There we go again, Morning Star, where you've got a strong red candle and then something in the middle, like a spinning top or a doji candle, then a big green candle that closes 50% of this previous candle. They call this a Morning Star. Why do they call it a Morning Star? I don't know. I don't care. I no longer trade patterns, but it looks like it's trying to make a Morning Star. I don't know if this is supposed to be red in the center or green, or it matters or it doesn't matter. But yeah, that's a Morning Star pattern. Then you get an Evening Star, which is the complete opposite. These two patterns for retail traders, according to retail traders textbooks, signal market reversal. So that means markets were falling for 4 weeks, 1, 2, 3, 4, and now it's time for markets to reverse and go back up, right? You know, you'd use that however you want to use it. So it's of no use to me at all. I know for a fact smart money doesn't care. Right, so here we are here now on the 1 hour time frame. This is where markets broke structure, then markets did this. Let's clean these candlesticks up a bit. Let's see what's going on. Right, so this makes sense over there. This and that makes sense. So markets do break a demand and then start to honor these other demands across, just to make sure that markets don't drop lower. And since then, this has kind of like held, and then markets did that, and that's where we are here. So potentially, markets might actually be trying to fare up, right? So where did price drop? Let's go back to normal candlesticks on EURCAD. I'm trying to remember, when did I mark this? I can't remember when we did this analysis now. This is from the 2nd of March where this was there. Today is the 17th. I can't remember this gray zone. It's going to go Kinihashi. Let's clean this area up. So there's this one supply, and then there was this supply, and then there was this retouch. And what did I tell you about supplies on top of supplies? Look at where markets kind of stopped. If we do this here, and you clean this up a little bit. I mean, it's been a while since we've reviewed this chart here, but markets didn't stop here. Please, guys, on the smaller time frames, please, supply on top of supply, demand on top of demand. If you don't want to get stopped out, just do the right thing, right? So markets eventually make their turn there. This is going to remove this. This worked. No, that didn't even work. Did it work? No, you would not have made money here, right? I mean, let's be honest. This is not something you'd call work. Price didn't even go down, right? Markets ready to cross. So let's remove that. Markets came back to it though, eventually. So markets are here, all right? So markets react to this gray area, and then straight after that, markets start to base out somewhere here, right? Let's go back to normal candlesticks. Sorry, I'm in a rush now. Just want to finalize a couple of things. And of course, well, we've got a bearish engulfing pattern. I don't know why I couldn't see it before. Right, so we've got a clean bearish engulfing pattern. I'm going to make that yellow. Nice, big, strong, bold institutional move, and then markets have pushed all the way back down. Another bearish engulfing pattern was left up there. If you're buying this market, just be very mindful of that. Right, now for me to buy this, by the way, a couple of things need to happen. Number one, I need to see markets explode higher. Right, so this one might miss me. I need to see price go above this white line and break market structure, and just to let me know that, yeah, we are serious, like EURUSD did. And then after that, come back for me, and then we go. Right, so until that happens for me, I'm not even going to put a pin in order, but it's a good trade to take up until somewhere there. Now, if you really look at the optics again, just so you know, if you want to make your money, right, this is about 17 pips, give or take 15 pips. And don't know who's good at maths here, right? You're looking at a strong potential for the next 2 to 3 days of anywhere between up to about 150 pips. 15 pips for 150 pips. That to me sounds like a simple classic 1:10. Would I take a risk here? Absolutely. If I lose it, no big deal. But if I make money 1:10, that's good money. If I go to the 5 minutes time frame, you can see markets want to do that sharp retest they did on the previous EURUSD before breaking market structure. You're going to have to make a decision and find out if that's good enough for you, right? But EURCAD is definitely an attractive trade to take for me as well, right? Bearish engulfing right here, all right? Markets broke this structure, but haven't broken this, and more importantly, this on the 15 minutes. That's what we really want to see break. So we'll give price time. Normally by first 3 hours, I always tell you, so that's 9 to 10, 11, about 12 p.m. markets then start to flow into the day, right? So this is something to watch out for. Once again, is this a strong bullish engulfment? No, it's not. And that's another problem. It's not a strong bullish engulfment. The bullish engulfment is here, all right? The bullish engulfment is here. This is why maybe you guys should start doing these sessions by yourselves. I don't know, because when I start them at 9, it's a bit too late for some movements, right? Look at how markets open at 9:15. By 9:45, markets have come to this bullish engulfment, and this could be you. This is a better entry. This is literally could be us, actually. And now we're asking for price to come back. but markets have come back for a fresh touch, right? So let's see how long it will take for this retest to happen and if it will happen. But just be very mindful, the coming back happened an hour, a couple of minutes ago, for 30 minutes ago, right? 30 minutes ago, we could be in the money right now. So it's prudent that you look at your own zones and be between, like I say, 2 hours before market opening, right? Ladies and gentlemen, I appreciate you. Thank you for sticking around. Let's look at pound. Let's just look at pound since there's going to be interest rates. So the next chart is pound AUD. I'm sorry, man, I'm in a rush, but I love doing the stuff, but whew, I fall so behind with the work that pays me. Fall behind with work that pays me. It is March, so investors do want their financial stock notes, number one, but also our corporate clients gonna start wanting reports and all sorts of things. Right, so it seems like we might have wanted to buy here. Does 2nd, 9th of March. Yo, you missed 4 days of doing this stuff and everything has changed. Right, markets rallied to the bottom. Okay, fine. Then markets went all the way up. There's a white line there. I need to remind myself what that white line is for. Right, so that's, you see, this is what I was saying. You see these white lines, when I mark them, I want to see price break something first. If they don't break it, I know the commitment is weak. Markets didn't get past this white line. We can see we've got a strong supply here. This is where I want to be. But this was because it was a sell profile asset the whole of last week. Well, actually, since February, this thing has just been selling on the daily time frame nonstop. And now we want to see a return of price to this level. I definitely want to sell there. I am hoping that with the interest rate hike, it might push price all the way up there. All right, we know that AUD has been weird of late and just strong for no reason. Right, so markets are now falling back, which would be a good place to buy just before 2 p.m. if you want to trade that particular news article. This is your first bet, but just be very careful of how tight your stop loss is. Let's go at Kinihashi. Let's go a little bit bigger. Let's go H1. Let's go normal candlestick because we're on the H4. Let's do this. Right, so on the H1 time frame, this is what it's looking like. Part of me just feels like waiting for the lower demand. That's what a part of me feels like doing. Part of me feels like taking it like a swing. If it was a daily area of value, I'd swallow all of this with one order. One order. It's only less than 100 pips. I would. But it's not. Right, so we've got a strong bullish engulfing pattern all the way down here. Might be safer. And the reason why both myself, but mainly you, because I don't do this all the time, but the reason why you don't want to go for the lower demand or the higher supply is because deep down you convince yourself but price won't get there, it's too far. And what you're really doing is admitting to yourself that you're desperate for money. That's what that thing means. It means you're desperate you'd rather risk here because markets will get here now and make money now. But it translates poorly for our trading psychology. It means we actually don't care about what the market wants to do. We just want to make money right now. And what the market does is create these opportunities on purpose because of that psychological flow. You want to make money right now? We'll give you a setup that looks like you can make money right now. Even though we know you're not going to make money right now, you're going to give us your money right now. I thoroughly suggest you wait for your good setups. Make sure you take the lower buy or the higher supply as many times as possible, even on the days where markets don't get to your lower buy or your higher buy. All right, so we could get action here. This is a fresh area of value. There's a green values, blah, blah, blah. Don't know if this is a test. Excuse me, but this is a PCP on top of an engulfing pattern, right? So there's a lot of buyers nested here. Okay, so if you've got a bit of capital and you want to split it, you split it this way. You'd also try to buy here, but be open to being stopped out. You have to be open to being stopped out, right? And then if you are stopped out, then you'd know that markets are going to come down here. This to me is a better bet. And then if price is still far though, hey? Price is still far, but yeah, there's a couple of hours to go in the market, so we shall see how that goes. But right now, markets are still so far from that area. Anything goes, guys. Price moves fast. I mean, yesterday it moved very slow. but when it trends up, it trends very well in 2 days, right? It can cover like a massive span of area. So be very careful. I wouldn't do anything in these levels, right? Technically speaking, we want to see price still sell until it gets down there. Okay, my people, God bless you. You know, stay well. Take special care. Stop loss behind you. A clear vision of what you want for your life in front of you. And I'll see you tomorrow for one of these. If you are at 365 and talking about the public, make sure we have your email address. I'll be dropping a big newsletter as well today. And then Walter, in 3 years, we are finally on track. It's going to be an interesting one. I'm over main cap coins for now. Let's go make money elsewhere. Let's go put money down. Let's go lay the foundation so that I can then go back to full-time trading and go 70% cash by the end of January, February, March, April. By sometime in May again, withdraw profits to buy more crypto. Right. Goodbye. Goodbye. I appreciate you. Cheers, everybody. Good night. Well, goodbye, not good night. Cheers. Cheers. Pleasure. And sorry about the sound earlier on.